All right, welcome everyone. Welcome to the trade findings and adjustments for Hurley Investments. And I better change the date on this one, huh? We're going to do the 21st, which means I really need to save this as the 21st and change it. Wow, there's all kinds of things wrong with this. 01/21/2020. Okay, want to talk a little bit about portfolio management today. There is a lot that happens that we have to be doing and that we have to be watching when we have a ridiculous market like today. With that said, let me go over let's see here. Let me go to my portfolio. So one more time I can go through and introduce what I was thinking and why. Trade findings and adjustments will really be for a more experienced trader. One for you guys to choose when to get in and out, but one for you guys also to learn a methodology or style of being profitable in your trades. All right, so here we go. We have this portfolio. I have Baidu Leap long calls at 155 that for all intensive purposes right now are down to 12.92. They've lost $2.25. So if I was to take a look at my $2.25 divided by $15.14, I'm down 14.86%. Question number one, how many of you would bail out of the trade being down 14.86%? Give me a simple yes or no. All right, awesome. You know what? Pretty impressive. We've got 15 people here. And no. And out of 15, I've got 9 no's. Okay, let me change it. What if you were down 50%? Would you get out of your trade then? I've got 3 yeses out of the gate. There were 9 of you that said no before. I have someone that's middle of the road, not necessarily, but there's a no before the not. So I'm going to say that's a no. So this is the question, because a lot of people are taught, well, stop loss it at 15%. And that way, if you're going for 20% and you're 50-50, you're going to be profitable. Ooh, I'm not going to say what just came in there. But here's the understanding. You need to understand your trade. Your trade is a leap long call. We have 12 months from last Friday, technically. We have a company way undervalued. But one of the reasons I only went in, I have $50,000. I only went in with 3 contracts. Why would you only go in with 3 contracts? Why would I only put $3,800 at risk? Because I'm a wimp? Because I don't want to maximize commissions for placing a trade. Or, as someone said before, if I lose half my value here, I am most likely going to dollar cost average, which means if this $3,800 goes down to, 38 divided in half, it's going to go down to 1,900, right? I'm going to pick up 3 more contracts because I will have 4 more earnings, assuming it has a bad earnings right now and it goes down, loses half its value. I will have 4 more earnings to dollar cost average. Now, the next time I dollar cost average, now that I'm going to have 6 contracts, I will probably go 4 more contracts. And at 10 contracts, I'm then looking at adjustment processes. All right, still going down. Do I need to add 5 long puts to make up some of the downward movement? Do I need to add some short calls at a certain price to lower my risk in the trade? I might add 7 short calls to lower my risk and still go with my original 3 contracts so that I'm not getting my butt kicked. Someone asked, why not call on 2022? Well, in all honesty, Abraham, I didn't want to spend $27 when I only spent $15, to be 100% honest with you. And I'm really playing the China trade agreement and how that's going to change or lessen tensions for China. So I could have, I might have, I should have maybe went out to 2022. I didn't want to stay in the trade that long. I'm really playing for the next earnings or the next 2 earnings and seeing it back up to 200, and then I'm good. Then I'm out of this trade. I'm going to book 100% return or more. I'm playing the current news event, and I'm going to go find something else to put some money in. Or for this portfolio, maybe I book 2 contracts and let one run all the way till January 21st and see if it's not back up to 250, where I'm 100% playing with the house's money. Now, I have Ford. Ford's a little bit different. I maximized 10 contracts on Ford. More than willing to dollar cost average 3 or 4 more times. I went out to January 22 because I don't have a China effect that really is going to affect Ford. The main reason, though, it was a $760 investment. On a $50,000 portfolio, I can throw money at this and maybe get up to 100 contracts and only be at $5,000-ish on the portfolio, 10%. Facebook, January 21, 28.55. Pretty cool on this one. This sucker's already profitable. A lot of people might have gotten out because in one day you can book 60 cents or 54 cents, I think is what it was on my first day. And you're going to have some people that will say, hey, 54 cents divided by 1365 is 3.95%. It's like 4% in a day. Annualize that 4 times the 250 days in the year, we've got like 1,000% return annualized. Well, with all due respect, it's 55 damn cents. It's $110. That's what it really is. I'm not interested. I'm not here for a trade record. I'm not here to annualize something to some ridiculous return. I'm here for real people to make real money in a real account in a real damn stock market. No paper accounts. No, look at my percentage of winners. All the BS is out the door. I'm here to make real money in a real account that if I lost $50,000, it would not jeopardize my lifestyle, but damn, it would hurt. It would be a pisser. Facebook seems to be doing okay. It weathered the storm from all the, oh, it's going to do this, it's going to do that. Again, I want to get out of it before it hits the fan, so to speak, when some politician bitches and moans that, oh my gosh, Facebook is affecting the election. It's a this earnings and next earnings event. I need to be out of it. It's a January 21. Again, it's a $2,600, $2,800 trade. I'm in and out of it. Under Armour. Ooh, Under Armour, rough one. Only went 5 contracts, and I went 5 contracts for $2,000 because I'm not necessarily sure where Under Armour is going to end up in the near future. Hence, I went out to January 2022. I think it has a lot of positive upside, at least to $28. That's why I like the $4.75. Add that $4.75 to $22.50. It comes out to $27.25. I have no doubt in 2 years it'll be at $28 where I will at least make 75 cents on it, but I expect it quicker than that. I could be wrong. I know it's hard to believe, but stock pickers, real people, holy shnikes, they could be wrong. So I would have loved to be into this 2025 contracts. I start out with 5. I might get greedy and add 3 or 4 more, maybe 5 more before the earnings. I might say, let's give it a run. It's a pretty dang good Christmas season. I buy a lot of Under Armour. I'm going to give it a run. I don't know yet. I might just sit on my hands and be smart and say 5 contracts is enough. Let's see, get to $25, $28, and I'll take my profits then. And obviously Visa, oh, why didn't I put more money into it, right? Well, pretty neat. It's what is it? It is a $2,700 trade that right now is sitting at like $4,400, right? Pretty dang cool. You know what's really cool about it is $13. If this gets up to like 27, I'll take one off and I'll just let one run. I won't even think about it anymore. I might let it run to $250. Or until, excuse me, I might let it run till the end of the year when Visa might trade at $250 or $300. But at $27, it's basically 100% paid for, where I could take one contract off, let them run. On the flip side, if it looks really good, I might add another contract in there for continued run at a higher price. Net, it'll be lower overall, but I'm just trying to manage a portfolio the way it should be. What I'm missing out of this portfolio, dreaded Boeing, right? Dreaded Boeing. The reason why I'm showing you this is because I sprinkled, would be the best way to say it. I sprinkled 28 contracts in there. And out of a couple people, I just kind of chose these. I could show you probably 4,500 shares, right? But I grabbed one person's stuff. We have 330 puts in place. If you would have asked me, I would have said March. March would be the latest that they would have their fix done. It now sounds like it might be mid 2020. I seriously doubt it'll be mid 2020. Hence, that's why on some of these, I went to January 21. I kind of really hope for an ugly, horrible, god-awful earnings. Because if it went down to 300 or 292, pretty good support level will bounce up pretty quickly. In which case, I'm going to dollar cost average these down at the $15 mark. That is why some people had a lot of money and said, Kevin, you could put a lot of money into this. I could have. But I don't place trades thinking how much money I'm going to make. I place trades on what's the worst that can happen and what am I going to do if that were to occur. Very rarely am I placing a trade thinking I'm going to make so much money. I'm placing a trade thinking about the what ifs. What if it doesn't do this? Okay, if I went to January 21, will that give me enough time to adjust, to make up money, to dollar cost average? You know, worst comes to worst, would it be mid 2020? Would 6 months give it enough time to run back up? Earnings will be a big tell on Boeing here and how bad it really is going to be. It'll be interesting to see. One interesting point, are banks really worried about it? $6 billion in a week they raised for a what if. $6 billion on a letter of credit, an equity loan. Tap into it if you need to. Just like that. $6 billion banks threw at Boeing. Yes, it's a problem. Yes, it's killed 500 people. And yes, it will not necessarily affect their stock long term. In fact, it'll be nothing but a bump in the road, which is a little bit unfortunate. A lot of people, hey, you're doing a trade that someone else did. You're doing a JP Morgan short-term bull call. Yep. But Kevin, you didn't place it. Correct. Will someone please tell me why I did not place the bull call in anyone's accounts? They had some saved orders. Why would I not place a bull call the following morning after I talked about JP Morgan? Someone give me a hint. Because the trade sucked, right? Because it wasn't working like it was supposed to. Because, Kevin, it was a stupid freaking trade. I've seen 3 of you at the same time say, Because the stock fell in the morning. You are exactly right. Because the stock fell in the morning. And because the stock fell in the morning, guess what? I'm not an education. I'm not, because I have to place a trade, I'm going to go out there and suggest a stupid effing trade the next day that seemed like a great trade the day before. You just can't do that. That is a difference between real trading for real people trying to make some real money in a real account in the real stock market. January 31st, let's just see what kind of trouble I would be in if I went and threw this in a bunch of people's portfolios. Holy Toledo. Add an option. Sell. And that was a 43, right? The midpoint right now would be 51 cents. Now, I knew at the time it was $1.35. When I looked at it, I think if you got filled first thing in the morning, you would have been filled at about $1.20, right? $1.20, it would be, you know, $1,200, right? Not 14, would have been $1,200. 51, you'd only be down $700 right now. I even had someone call me and said, why did we put a trade on a down stock? And so I answered that individual and said, well, I didn't. Because it was down, I chose to wait till the end of the day. Because it did not recover, I chose to not enter my trade that day. Because it took a couple days so our last one was on the 14th, right? Pretty sure it was the 14th. It's a week ago. Yep. Might have been here. I don't know. The short answer is I didn't like the movement. A sideways trade on a bullish moving stock is not going to get me to where I wanted to be. It doesn't mean that I might still not get there in the next 2 weeks. But I tell you, I would much rather enter a trade today at 51 cents than I would have a week ago at $1.20. So guess what? I didn't place the trade. To make matters even worse for an individual, well, I'm going to take a small loss and I'm going to push it out in time. I'm not sure in the last 30 days I see a chart pattern that warrants that. In fact, if you look at it short term over 6 months, I see a month time pattern where it still held that range. I see a month time pattern where it held the range. I'm right now seeing even a tighter range where it's seen that pattern for even more than a month. Kevin should break higher. It might. I just don't know what the catalyst will be. You know what I know? You know what I know? I know what it's not going to be. It's not going to be Boeing that they go and loan $1 billion to. Portfolio management includes not thinking how much money you're going to make in your trade, but what the risk is. How to manage that risk if things don't go the way you have planned. Portfolio management's about setting up your next couple steps in the future if things don't go the way you thought they were going to go. Portfolio management is if you get a trade the night before and the setup doesn't look good the next day, you probably shouldn't place the trade. And to hope that it's going to rebound higher in the future when your past history does not show that, probably not the best one to be in. Just some thoughts on trade findings and adjustments for today. I wouldn't look to be entering a trade, but I am anxious for something at JP Morgan and something for Boeing here in the near future. Those are what I'm kind of keeping an eye on right now. We do have earnings coming up. It might be easy to follow a stock after an earnings event if we can see some follow through. But from where we are right now, I would not be putting on a trade right out of the gates today. With that said, pretty interesting. Who would have thunk IBM could get their crap together and or have Raytheon make it profitable so much so quickly? That's the biggest move I have seen in IBM in forever. Out of the blue. Pretty impressive. Everyone expected Netflix to chunk it, to blow it, myself included. I had no hope, no understanding on Netflix. Pretty amazing that did as well as it did, but their guidance was light. So even they are expecting not so much in the future, which means I don't understand this. It'll be interesting to see the follow through tomorrow. Questions? Are there any questions you guys have that I can answer for you? Any questions you guys have that I can answer for you? Trying to make this as real as I can, and you know, it's real money here, so I'm going to be smart with what I'm doing. Everyone understood how I'm looking at trades and how I'm planning on dollar cost averaging if I'm in these leaps? Good. Thank you, Lance, and thank you, David. About the delta, 0.40. The delta on what, Abraham? What has a 0.40 delta on it? On the calls? Yes. The short answer is I'm really expecting long-term movement where that delta should go higher to be 100% honest with you. But when I placed the trade, I was trying to pick a spot that it should bounce from and that would mathematically fit the amount of money that I would be willing to spend on the overall trade in the portfolio. So to be 100% honest with you, I never gave the delta a thought as I was placing the trade. I was looking at longer term, where it's going to be, where its support and resistance levels were, where it's going to move at certain points, particularly for Baidu. It's like 166, 170 that it has a resistance level, a long-term resistance level. I didn't want to spend more than $15 in case it struggles to get over that resistance level. So because of that, I went out to January 21. Because they made their first deal, a second one coming, it should improve global economies. I went out to January 21, 155. Hopefully going to get to dollar cost average here and lower that cost basis down even a little bit more. Good question. Are there any other questions? Lance, why haven't you invested in Boeing yet? Partially because the portfolio wasn't active to do that when I was doing it for other people. And when that happens, I've got a 5-day rule before and after that that I could not invest in Boeing. It will be my preference. But as we dollar cost average for everyone else, that's when I'm going to enter my Boeing position. A comment was made, and it's very impressive. A lot of people right now do prefer Baba over Baidu. With that said, my first entrance into Baidu was at like $65. Watched it go up to $7.75, 10 for 1 split. I didn't have as much faith in Baba as I do in Baidu, and I'm much more familiar with Baidu. It's funny because Baidu used to be Kramer's favorite, and then Alibaba came around, and now that's his only one he invests in, which is just fine because I have made people millionaires with Baidu. And you trade what you know. But Alibaba would probably be my second. Actually, IQ would be my second. Baba would be the third company on my list of reputable, usable China companies I'd be willing to invest in. Okay, everyone. Hey, have a wonderful evening. This evening, I will also get out there the commentary that I was trying to record yesterday that I did not do. So I will record one tonight and get a commentary out there. Keeve, nice to see you back. Hopefully Hawaii didn't treat you too badly. Pleasure to have everyone here tonight. I've got a quick phone call I got to make here. And I look forward to seeing you Thursday morning, 10 a.m. Mountain Standard Time. We'll see if we can't find a trade that seems to make sense at that point in time. Good night, everyone. Have a good one, and I will talk to you soon. Bye-bye.